So the Trump administration just dropped a policy bombshell, a $1,000 baby bonus for every new child born in the US deposited into a tax-deferred investment account tracking the S&P 500. And with Strategy now qualified for S&P 500 inclusion, this is a powerful economic wedge with implications for markets, demographics, and Bitcoin. So let's break this down. Every newborn in the US would get $1,000 deposited into a baby 401k style fund, tax deferred, automatically allocated to the S&P 500, and assuming 3.6 million births annually, that's $3.6 billion in new guaranteed passive inflows to the S&P 500 constituents every single year. That sounds small, but here's the kicker. In the era of passive flows, predictability matters more than size. Index funds like those tracking the S&P 500 already attract over $400 billion in net inflows per year, but most of that is discretionary. This baby stipend becomes non-discretionary, policy-backed flow, indexed, automatic, and growing with the population. And because this flow is guaranteed and repeatable, companies that benefit from these passive flows become more valuable simply by being in the index. And guess who's in the index now? Strategy. Which means even a small boost to passive flows boosts MSTR's demand, and that's a backdoor way to increase passive Bitcoin exposure through this baby 401k policy. So let's get specific. MicroStrategy makes up about 0.24% of the S&P 500 by weight if it was included today. That means if $3.6 billion flows into the index annually, MicroStrategy gets around $8.46 million of automatic passive buying each year. And that number compounds because MicroStrategy will reinvest in Bitcoin. The price of Bitcoin rises, MSTR's weighting grows, and the loop reinforces itself. Now, of course, MicroStrategy is doing larger buys in and of itself, but as you know, it's one of the fastest growing stocks in the world today. And so this is just another component that will feed into this reflexive loop that drives MSTR higher and ultimately drives its inclusion in the S&P 500 to have a higher weight, so on and so forth, making it benefit more from this passive baby flow of $3.6 billion annually. It's still modest, but it's an autopilot bid for Bitcoin backed by public policy. Now let's ask the tougher question, will this change fertility? U.S. fertility rates currently sit around 1.6 births per woman, far below the replacement rate of 2.1. Would a $1,000 one-time incentive move the needle? Probably not by itself, but incentives matter at the margin. The more relevant question is what this policy symbolizes. This stipend is more than a financial account. It is a cultural nudge. It says, we want you to have kids and we'll invest in their future alongside you. When paired with other policies like child tax credits, paid leave, and even parental support, this could bend the fertility curve upward, which the US and all of Western civilization is in dire need of. Even a 0.1 increase in the fertility rate from 1.6 to 1.7 adds hundreds of thousands of births per year. It's not about turning the ship around overnight. It's about planting a flag that babies are good, family is good, and growth is good. You suddenly have generational capital formation and a market-based way to restore economic mobility. You also get mass onboarding into capital markets. Millions of kids growing up with investment accounts, watching compounding in real time and learning the value of it. That means more educated investors and potentially more demand for alternative stores of value, which leads us here. Is this good for Bitcoin? Absolutely. First and foremost, it's good for America. It rewards family formation and makes capital ownership accessible. But second, it builds demand for scarce assets. By seeding capital early, even with public funds, you set a precedent for long-term saving, something that's sorely missed in today's education. Some of those funds will stay in the S&P 500, but others will flow into things like Bitcoin, gold, and other hard assets. And let's not forget, Strategy is now qualified to enter the S&P 500. So the baby bonus is, in a very real way, a state-funded dollar cost average into Bitcoin exposure, no matter how small the initial footprint. If Bitcoin becomes a larger part of the financial system and more companies like Strategy or even future Bitcoin native firms enter the S&P, the Bitcoin exposure via these passive flows will only increase. So this policy isn't just a handout, it's a signal that we're entering an era where economic policy, demographic survival, and monetary competition are converging. And the people who get it early, those who see Bitcoin not as an investment but as the base layer of rebuilt civilization, will be the ones leading that future. Good for America, good for Bitcoin. Let's build it. That's all for today's video. Thank you so much for watching. If you enjoyed, make sure to like and reshare so more people can see this. And of course, check out Horizon. Horizon allows you to stack Bitcoin using your home equity without additional monthly payments or interest charges. Check out Horizon at joinhorizon.com or by scanning the QR code right there. That's all for today's video. Thank you so much for watching. I'll talk to you soon.